Hello, this is Victor Santana and welcome to Stock Hunter's video for June 21st. How's everybody doing? Hope everything's going fine. Let's take a look and see what's going on in the markets here. As you can see here, it has violated and broken down below our exit point here. So things are not looking pretty good for overall U.S. market. Could be a warning sign of worse things to come. We do see a lot of support underneath it, so we might be trading in the range. A lot of support around in this area here. Worst case scenarios, we might be hidden down in this area in the next few weeks or in this month. So let's take a look at the stochastics. This chart that we're seeing is the weekly. So on the stochastics for the weekly here, you can see it has already crossed over here, so generating a red arrow. Now looking at the daily here, you can see that price did bounce in this area. However, it has broken down since last week's low. So now it's going to have to fight its way up because last week's lows are this week's or this coming week's resistance area here. We are below the 18-day moving average, so we're looking at bearish trend here with a lot of support down in this area here where these moving averages, the 200 and the 50-day. Now looking at the Dow here, as you can see, it has also broken down below the exit point here, so this is considered a time to exit out of the market. Wait, see what the trend's going to develop into. Stochastics here and also below, crisscrossing. And as far as the daily chart here, it is in a bearish tone here under the 18th. It is now below last week's low, making a lower low. So things are going to be a little interesting this week, while stochastics are headed downward and becoming neutralized, which is in this area here. We may be able to see things bounce around in this area. Now looking at the NASDAQ here, it is showing some strength. Did violate the exit point here. However, it managed to move up and close above this area here, which is a good strong sign. We may be able to see prices again reach to this area here, trying to if things do break down, maybe trying to suck in more money before the next wave down. Now looking at stochastics here, it has not crossed over yet, so we'll see how things go for next week on this, but it's oversold. On the daily chart here for the NASDAQ, it has broken down last week's price. However, as you can see, it is trading right above it, also above the 18-day moving average, which is a good sign. We may be able to see prices head up to this area to see if it breaks above this high here. Stochastics do look like they want to roll over and hanging in there. Now looking at the S&P 500, as you can see, it has violated. However, it has stopped right at the exit point here. While on the stochastics here, it is now just touching. So it's hard to see which trend it's going to go. So we'll just have to wait to see what the trend wants to do. In terms of the daily, what we see here, we are noticing it is below the 18-day here and below the last low of last week. So things could look a little bearish. However, a lot of support down in this area. As far as the Russell 2000 small caps, it has violated down in this area, but resting right on this line here. So in terms of stochastics here, it did cross over, showing that it did cross over, so you consider that another red flag for the market. In terms of the daily here, as you can see, the prices have broken down below its last low and is below the 18-day, so it's looking kind of bearish with a lot of support down in this area. As far as globally, pretty much same identical movement as the Nasdaq, broken down below. However, it managed to save itself and close above this area here. So we can expect to see prices come back up in this area to retest. As far as the stochastics, however, it is showing a clear indication that it is getting exhausted and generating another red arrow of the market going down. And as far as the daily, you can see here, it has broken down below. However, it is trading right at this from the last week's lows, but below the 18-day moving average. With we could see a lot of support down in this area or in this area as well. So we'll just have to wait and see. It's going to be an interesting week here. As far as some things to go positive on, I was mentioning about the US dollar. Now that's showing some strength. As you can see, the lows are getting high, except for this one here, but it's under the 18th, and the highs are getting higher. Now that it's trading above the 18-day moving average, went ahead and bought on the first pullback, and now it's resting around this area, considering adding more position in here. Coming in Monday, putting a stop loss or an exit point at 22.68. Potentially we can get up to here or here. As far as the gold is also pulling back. Went in and bought some right at this area here when the market opened. Kind of hard to tell which way it's going to go. However, my exit is in 1985 because we are getting higher lows in this area. As you can see, the last two highs are pretty much even. As you can see, it's hitting against the 50-day moving average. If it could break it, potential now is 100-day moving average. So potentially, if it gets up here, this is where I sell half of my position and move my stop to break even or slightly higher to ensure a profitable trade on this one here. And something to consider looking at is commodities. If the gold gets weaker and the dollar gets stronger, of course, commodities then will start going down, and this is the inverse of the commodities to short. It has been moving up. It is now trading above the 18-day moving average. Considering to get in on this on Monday, depending how things look, was an exit at 54.66. And that's pretty much it. I hope you guys have a good week, and let's keep an eye on the market. May the trend be our friend.